Is it completely unlikely that Bitcoin will reach those all-time high levels again this year or even come near them?
I mean, if you had a total capitulation, like if you had a pivot in Fed policy and a reliquefaction of markets, it's a pretty high volatility asset. So you could have a pretty big swing up. You could retest some highs, but I think that's not the right way to think about it. I think when you look at Bitcoin, it's about what is the probability of where it is 3 to 5 years from now, and decide whether or not you want to have an allocation to it. So I view this as a good place for dollar cost averaging, and I view it as a very uncertain time for trying to forecast 6, 12-month price changes.
Yeah. Have you been impressed by its performance compared to the traditional assets?
It's held up better than a lot of those ARK stocks, for example.
Yeah.
I think people that aren't familiar with its fundamentals, there are a lot of people on say FinTwit and macro people that are like looking at a chart of Bitcoin and they're like, oh yeah, it's about to do like what Roku did, like full round trip, or stocks like that, Peloton.
Yeah.
And it's like, well, if you dig into the actual what's happening, who's buying it, why they're buying it, what are the fundamentals? I was like, I don't think it's going to capitulate as far as you think, in terms of like some of these other stocks have done. They were just inherently overvalued, and so I think it has held up better than a lot of those tech stocks, and I think that's probably going to continue, even though. I have no idea if we've actually seen the bottom or not. I mean, we've seen a pretty significant capitulation. So we had what in some ways was a very, very sharp recession due to the lockdowns and everything, and yet the market went straight up. And that's because of all the record amount of liquidity going into the market. And if you look at most charts, it looks like a melt up. So you can argue that we've already seen the melt up. Now, you could get another one if basically the Fed is forced to ease into an inflationary environment, and other central banks are doing the same. Essentially, what I would kind of point people to look at is what happens in emerging markets during recessions. Because often, if you look at what's happening in their stocks in local currency terms, they're going up because, it's rather inflationary, and the unit of account is what's going down. But if you look at their stock market in dollar terms, it's really not great.
Yeah.
Same thing is, if you look at Turkey, for example, because inflation's so high, their stocks are actually doing pretty okay in lira terms.
Yeah.
And so I think that if you see that kind of thing, maybe to a lesser extreme, happening in developed market currencies, you get kind of the same phenomenon where maybe stocks in nominal terms don't do terrible, but if you price them in something like gold, for example, the chart will look much worse. Or it's a basket of hard goods, maybe a basket of commodities. I think that they are going to perform poorly in that environment, but you can technically have a melt up in fiat currencies if you debase the unit enough. Two examples. One was late 2018 when we had that market sell-off with the Fed tightening. They were talking about being on autopilot, and then there's the famous Powell pivot where they stopped tightening, and that a lot of people thought it's because of the S&P 500 being down 20%, but really it's because credit markets froze. So no junk bonds were issued for 6 weeks in the United States. The whole market just froze, and that's a more serious problem than just stocks being down 20%. And so that kind of forced them to stop because it was basically the market became illiquid, and so they had to stop. And then less than a year later, in kind of autumn 2019, they had the repo rate spike. So they were still trying. They stopped raising rates. They were already cutting rates by that point, but they were still trying to tighten their balance sheet. They were shrinking their balance sheet, and they had to suddenly reverse course into quantitative easing because basically the banking system ran out of just excess liquidity, and so repo rates spiked. They had to come in and reliquefy it, and that's an example of something breaking. So generally, that refers to either a recession forming, or if it's financial markets specifically, it's credit markets, treasury markets, interbank lending markets, something like that just stops functioning and runs into a liquidity problem and seizes up. And then they're forced to basically reliquefy it, even though, inflation might be hotter than their target.
Are we technically in a bear market?
Well, bear market's generally defined as 20% downturn, which is arbitrary. So, but clearly we are. If you look at, especially under the surface of the indices, I mean, there are stocks down 50, 60, 70, 80, 90% in some cases. And then in addition, if you look at a 60-40 portfolio, like most of these other stock sell-offs in history came with bonds doing pretty well. But this one actually, bonds and stocks sold off together. So it actually hit people's kind of diversified holdings as much as a bigger stock sell-off normally would have. So I would say by most standards, yes, we're in a pretty significant bear market. I think everybody's gonna have a different approach. Mine is to be diversified, right? Because if you're not over allocated to any one asset, it gives you serenity to kind of just move through the environment. And so a 60-40 portfolio is not great because both broad stocks and bonds are basically, they benefit from disinflation. They want yields going down, they want commodity prices to be low, Whereas I think if you enter a more stagflation or inflationary decade, you want a better mix. So you maybe want equities, but you want more value-oriented healthcare, energy producers, pipelines, things like that. You want commodity exposures, some cash for, capitulation events, rebalancing, things like that. And then I do think that Bitcoin deserves a role in most portfolios. And then how much depends on maybe how many hours they put into understanding it, what their conviction level is, what is their tolerance for volatility. And that can vary dramatically. I mean, some people might want to put 1 or 2% in the Bitcoin. Other people might want to have half their portfolio in Bitcoin.
Yeah.
I think that I'm not going to tell people what to do.
What does Bitcoin really mean to you?
Well, I think, given that we're at the Oslo Freedom Forum, I think the best thing to focus on is the human rights implications. Basically, that it can do things. For example, if Bitcoin didn't exist, I'd be talking probably about gold, right? So that's prior. If you have a stagflationary environment, it's generally those commodities and like the harder monies that hold up well compared to equities or fiat currencies. But now, because we have Bitcoin, we have a competing asset to gold, right? So you can talk about gold and Bitcoin together or competing or however you want to look at it. But then unlike gold, Bitcoin also has a role throughout the world of peer-to-peer payments. Basically what we've done, or what Satoshi did was, prior to 2009, if I wanted to send money to you long distance, I had to go through an intermediary, a centralized intermediary. And he basically made it so that for the first time there's global peer-to-peer money. And that just kind of changes the rules about how all this works, assuming it gets big enough and widespread. The world can't buy the S&P 500. They can't buy the stock markets that have multi-decade stretches just going up in real terms. They can buy local real estate, which is illiquid, non-fungible. They can try to get their hands on dollars. They can buy the local currency. They can buy some gold, but it's generally just not a lot of options. If you're in weak currency environments or weak areas of rule of law where they can just freeze your bank account or things like that, and this just gives them a tool that I think, the more people are aware of it as an option, the better.
What do you think is the most undervalued quality of Bitcoin?
Probably its payment aspect, right? So it's been pretty well, I think, understood now for its scarcity, the whole 21 million cap. But I think there are still large swaths of people in developed markets that are like, what could Bitcoin possibly solve? Like, I just use PayPal. Like, why do you need Bitcoin? And it's like, people have to go outside of their bubble. I went to Norwegian Parliament yesterday, and we had a number of people from Nigeria with us. And they were telling their stories, and she was saying like my bank account was frozen because I was protesting police violence, and so I had to start using Bitcoin to go around that and keep my finances open. And when people hear that, a lot of people just haven't thought of that. Their mind's blown. And so I think that that's something that more people in developed markets have to understand. And I think it's not surprising that chain analysis is like a crypto adoption index. The top 20 countries, 19 of them are developing countries. And then there's the United States because we're weird. But it's 19 developing countries, and it's because the benefits are more obvious to them. It's much easier to explain to an Argentinian why they might want to hold some Bitcoin or some stablecoins compared to trying to convince an American or someone in Norway why they might want to, because we have certain freedoms and certain stability with our currency that a lot of these other countries don't have. The major difference, algorithmic stablecoins have been fraught with failure. This is not the first one that blew up. This is the biggest one, but there's been multiple blow-ups for algorithmic stablecoins. So it's just inherently an unstable design. Whereas fiat collateralized stablecoins, they have risks. I mean, they're centralized. You have to trust that them and their accounting firm are auditing it properly. But for a lot of people, if you're in say Lebanon or Argentina, if you store dollars in the bank, they can be forcibly converted into local currency, so you can lose your protection there. So in many cases, trusting an outside and for them an international organization to kind of custody their dollars is preferable to trusting a local custodian. And so for whatever risk that might have, they perceive it, I think in many cases rightly, as less risk than domestic banks for dollar holdings. And then especially for people who, you don't have a ton of excess savings, you can't withstand, 30% volatility, 50% volatility on your asset. So a lot of them at the current time, the way the market's structured, need dollars. So that's why it's outside of Bitcoin. It's one of the few areas that I've been bullish on is the proliferation of stablecoins, because a lot of them are just used for trading, which I'm not, I don't think that's a very sustainable market overall. but then the actual payments, there's a decent amount of activity there. And so, it's got downsides, but I think it's an important part of the market.
Can you simplify what Taro is? Because that'll essentially enable stablecoins on top of Bitcoin, right?
Yeah, so the funny thing is Tether started on top of Bitcoin on Omni, and eventually it migrated onto other things that were more suitable for it. Taro is a protocol proposed by Lightning Labs that's based on the Taproot soft fork that allows them to put assets on Bitcoin and Lightning. And so if that's successful, the most obvious use case is stablecoins, because in theory, the Lightning Network is, one of the best places to have stablecoins because it's so fast and cheap compared to even the altcoin, undecentralized networks. This one, it runs on Bitcoin base layer, but then you get the speed that's, rivals any of the altcoins out there. And so I think that's, all else being equal, I'd rather see stablecoins on Bitcoin than, there are a lot of Ponzi schemes in the space that basically there are things that are just based on first in, first out that are just unsustainable. And a lot of projects are just based on these kind of artificial temporary incentives. So, you put kind of funds into a protocol that lets you pay out higher than market yields, but only lasts a temporary period of time. So it's kind of like bootstrapping. And that only works if you have actually a good product. Like if I have some sort of say protein bar and it's new and it's great and I'm trying to sell it, I might do marketing to, have it reach critical mass, but then it has to become profitable and self-sustaining on its own. It has to actually be a good product. Whereas if I'm just trying to sell air, if I'm trying to sell fraud, after my initial marketing runs out, there's nothing there. And that's what a lot of things look like in the crypto space. And I think people have to be very careful about what they go into, especially outside of Bitcoin. And I saw a lot of people say it, I think it's the best way to describe it. If you don't know where the source of yield is, you're the source of the yield. You're the exit liquidity if you can't find who else is. The difference between a fiat collateralized stablecoin and an algorithmic one. And so I've not been raising warnings about Tether the same way I was raising warnings about Terra. I think that there are still challenges about collateralization, for Tether, because you can think of its stablecoin as being one of two models. If your assets and your liabilities are identical, the same amount, then your assets better be risk-free, because if you lose any percentage of them, you're now underwater. On the other hand, you can have more like a bank model where you can take some risk with your assets, but then you better have a capital buffer. Like your assets should be bigger than your liability, so even if you lose a percentage of them, you don't go below your liabilities. And so we see a lot with USDC, they shifted over to be 100% cash and T-bills, and Tether's kind of moving in that direction, but right now they still have that mix of other collateral, but then we don't know if they have a capital buffer. And so, personally I would rate Tether below USDC in terms of, say, the assurances that it's a perfectly one-to-one pegged in all conditions. But I don't have the same kind of total systemic concerns about it the same way that I did with Terra Luna.
Where are things lagging that might affect all of this?
So unemployment is pretty lagging as far as the economy is concerned. We're starting to see initial signs of initial claims starting to rise, initial jobless claims. And so we're seeing very early signs of slack in the labor market, but the official unemployment's low. Like a lot of other indicators, that the leading stuff that kind of comes before unemployment has already been flashing, if not red, at least yellow. And so unemployment's kind of slowly starting to maybe wake up to that and maybe start to drift higher. And then when you look at the commodity supply chain, basically oil and gas are the master commodity, and then it trickles to everything else. So now the cost of running equipment to mine copper is higher, and then the cost of making fertilizer is higher, and therefore the cost of food is higher. And then when you have Russia and Ukraine responsible for a significant portion of the world's wheat exports, that's an issue. And so we see a lot of protectionism among countries, and then you have less efficient distribution of some of those. So basically I think, food inflation follows some of the things we already saw, unfortunately.
Thanks for watching. Until next time, smash up the like button, leave a comment below, and we'll see you tomorrow, friends.